All right. Well, hello, loyal listeners, and welcome back to another week on the Money Mentor podcast. I'm Lachlan Hammett. And as always, you're not here to listen to me or any of the hosts for that matter. You're here to listen to Doc Wilson. How are you today, mate?
Yeah, good, Lachlan. How are you?
Well, mate. Well.
Yeah, we're marching down towards Christmas. There's, 5 weekends left in the market. We're seeing the usual outcome for the end of the spring selling season, which is lower clearance rates and higher numbers of listings. But that's what we usually see. So it's actually not a bad time to be buying property because you've got a bit more leverage out there because sellers are like, hey, I want to get this deal done before Christmas, because there are costs involved if you put it off again till next year, when the market starts up again.
Fantastic to hear. I've just got unconditional on my first one.
Oh, okay. Well done. Congratulations.
Thank
but as
you.
I said, it's probably a good time. It's usually a better time to buy as the spring market progresses, a better time to sell earlier in the spring season. And it is all about that sort of supply and demand balance. But that's what we're seeing now. We see it every year. Clearance rates starting to fall away. And still, high numbers of listings. And as I said, it's a bit about that. A lot of buyers have actually bought, so they've done the deed, and sellers are getting a little bit nervous. So, hey, let's get this thing done before the end of the year. So, it tends to see those lower clearance rates and a bit more negotiation leverage for buyers. But the markets are still pretty good. And we're going to have a look at that today, because we've got the latest house and unit price data for October coming through a little late in the sequence. We showed rents last week rather than prices, so we've sort of gone around a little bit in reverse with rents first for the month and prices second. But some interesting news nonetheless. So if we're all ready to go, let's go.
Let's do it, mate. Let's go for it.
Let's go for it. My Housing Market, of course, is my brand. I act as an independent consultant for the housing market. We also provide our own in-house data sets, so we compete with the other data providers going forward. But we're all about trying to give information on the current state, and that's most important because we want to be making decisions based on what's happening here and now in the housing market. And we don't just use prices and rents as our model. We use other correlating evidence to support what's happening in terms of movements in prices and rents. And that gives us a better sense of not just where we are now, but where we're likely to move. And that's all about the future prospect of housing markets. And as I said before, we're heading now to the end of the year break. What have we got? 5 weekends left, 6 weekends left, perhaps in the market, and then it all closes down over the holiday break. And then we're back in February. Still a lot of action around, though. Gold Coast markets are pretty strong through the holiday season, particularly in January. And, of course, we have a big super weekends of auction sales on the Gold Coast, and that just fits the holiday season environment up there. But otherwise, most markets, except for the sort of the holiday section, the holiday segments are pretty quiet through that period. So sellers will be getting a little nervous. We want to sell the property, and buyers will be thinking, oh, maybe that gives me a bit more leverage. But enough of that. We've spoken a lot about that so far. Let's look at what we're going to do today. And it is the week ending Wednesday, November the 13th. Maybe before we start, we could just, it's been a busy week over the last week. We've actually had a big event, not locally, but obviously internationally, with which has been, hammering away for months. It feels like years. The US election. And Donald Trump got back in, and he actually got back in pretty easy.
Convincing victory.
Yeah, it was. Yeah, I mean, some people are trying to equate it to a landslide. Is it a landslide? Is it not a landslide? And they're looking at other results which were stronger and saying, no, it's not a landslide. But gee whiz, when you just look at the states that he won just about all the states, And he also got the popular vote, which is a little unusual
too.
Yeah, so it was a pretty convincing win. I think the markets were predicting that anyway, that he would win. And as far as the implications, I think, the broad implication is, and we're already seeing that so far, is that there'll be a surge in confidence, maybe short term, maybe medium term. We have to see how things pan out. but we're already seeing a very frothy stock market as a response to that. So I think if anything, it means that we'll get a surge in activity. Of course, there are other issues, what's going to happen with tariffs and these sort of bits and pieces, which can be problematic down the track. But nonetheless, I think that what it means is, again, we may see demand pushing ahead of supply, and that means the old bogey inflation might raise its ugly head in the shorter term. And of course, we want to get rid of inflation because we want to get lower interest rates. We've discussed that as we did last week with the Reserve Bank's decision on hold again. And even though the Reserve Bank is saying, probably not till 2026, they're going to cut rates, that might even be put off a bit if we get another round of inflation, So hopefully that doesn't occur. But just commenting on the election, I think that any consequences would maybe be that we'll see a bit of an uptick in growth, more demand, less supply, and that's a confidence thing. And but there are factors coming from left field, such as perhaps the tariff issue, which may interfere with that. But at least we've made some comment about it. So there we go. So let's hope we don't get more inflation because we want some lower interest rates. All right. So this week we're going to look at those latest house and unit prices over October. We've got the September home building approvals to talk about, and as usual, the latest auction results. So let's have a look at home prices. Up again over October, house prices rose for the 20th time in the last 21 months. And of course, what we do is we measure quarterly prices growth, but we do it every month. So we take three months, and then we advance it month by month by month. So it gives us lots of data to work on. So we have quite a robust measure, but we can see the trend because we're moving it month by month. So it's always important to see how the trends are moving. And our results are pretty much the same as the other major data providers. But we come in earlier than everybody else because we come in the day before the end of the month. We come in the day before the beginning of the month. So we're up there with the first with both commentary and data. But as I've just said, house prices are up again, and we saw a rebound in unit prices. Unit prices been a little bit more volatile, and they did fall away over the previous month, of course, which is September. But they've bounced back over October. And what we do for national prices, we use a weighted average. So we obviously there's no national house, or unit, so we can't have a national house or unit price per se. But what we do is we use a weighted average of the capital cities. So we take the medians of each of the capital cities, and then we weight that by the number of listings and sales. So obviously the big capitals such as Melbourne, Sydney and Brisbane, they contribute most to the national house price, particularly units, because most units sales listings come out of Melbourne and Sydney, particularly Sydney. So any changes there, they have an impact on the national unit price. But yes, national unit price bounced back. National house prices continue to rise. Maybe just a sign that the growth spurt of the last really 2 years is starting to ease. No surprise there because, affordability barriers start to impact buyers who can't just keep going to the bank saying, give me another 100 grand, give me another 100 grand. And, the answer from the banks is, well, are you earning more? And the answer to that is maybe not. They're not giving you any lower interest rates, so you can't afford to pay more for your prospective purchase. And that's the affordability barrier that rises, which is a good thing in this country because it means we sort of can't overborrow, because the banks don't let us. But it does put a ceiling on prices growth unless there are significant changes in prices or interest rates. And of course, we haven't seen a change in interest rates for a while and maybe unlikely to see a change for some time given the latest data. So that means a flattening of prices growth, which I think is a good thing for predictability and certainty in our markets. But the mid-spring market is still humming along quite reasonably. We discussed at the beginning, Lachlan, that we're seeing the usual end-of-year issues with lower clearance rates and higher listings. But it's been a good spring selling season. We've seen really record numbers of sales in a number of months. So there's been a lot of activity. And as I said, those affordability barriers and the fact that a lot of buyers have bought. So they've done the deal and they're now enjoying their new properties. So that has satisfied some demand. So that means we get a little lower action in terms of prices growth. So overall, let's have a look at the data. This is the national house price, as I mentioned, up 20 months over the past 21 months of growth. So continuing to rise. And when we look at the breakdown of the capitals, most of the capitals reported increases in monthly median house prices. The exception was Melbourne, which is still sort of dragging the chain a bit, that Melbourne market. But gee whiz, I think it offers some pretty good value. I think it's an opportunity market sort of screaming out Melbourne when it does eventually turn around. And maybe that's when we do get lower interest rates. But Melbourne was the only exception in terms of growth. No surprise. Well, Hobart is picking up after a pretty subdued year or so in Hobart. It's starting to, as usual, do the reverse to what all the other capitals are doing, and it's picking up. But reasonable growth levels there. Brisbane, of the big markets, has certainly produced another good result, up 0.9% over the month. And as I said, all markets rising, all capitals with the exception of Melbourne rising over the month. When we look at the annual results, it's a bit more revealing in terms of underlying growth. Sydney's up 5.2% over the year. Again, Melbourne's still just really not going anywhere over the past year in terms of house prices. But look at Perth there, 24.8% increase over the past year. You'd be pretty happy if you're a homeowner in Perth with that sort of an increase. That's a massive increase, isn't it? But, Brisbane up 16.1%. Good result there, big result there for Brisbane house prices, and Adelaide up 14.8%. But they've really cleared out from the other capitals, with strong double-figure growth. And that's what's pushing along the national result, up by 7.1%. So similar to what we had a year ago. I'm not sure national house prices will increase by the 8% they did in 2023, but they're going to get pretty close to that. It's been, a good consolidating market, I think, going forward. But hey, let's look back 2 years, Lachlan. What has happened over the past year? Look at that Perth result. 40% increase in
Incredible.
The Perth median house price. 2 years. Oh, my God. That's a really stunning result. Yes, Perth was in the doldrums for years, and it's sort of roaring back now. So a bit of catch-up there going on. But no real sign that Perth market's easing, although up just by 0.5% over the month. And, the question is, they have significant affordability advantages, that Perth market, because the incomes are higher than anywhere else, and yet their house prices are lower. So, given the same sort of bank conditions for lending, it does give them that opportunity to pay more, compared to the other capitals. Similarly, Adelaide and Brisbane, where prices are lower, particularly when we compare to Sydney. So that means that they can continue to push upwards. But I do think they're starting to reach towards the peak of their affordability cycle. But Perth, I think, still got some way to go. So I'm interested to see what happens with Perth next year. So their houses. Let's have a look at the unit market. As I said, bounced back after falling away over September. It's more volatile, that unit market. We've seen 3 falls over the past year of monthly median house prices taken over the quarter. But back up again over the month, and that was a response to the bigger markets, which have most of the unit sales, and that's Sydney, Melbourne, and Brisbane, all recording quite solid growth over the month. And when we look at and again, Perth leading up by 1.1% for units, even though it's a smaller unit market, it's really still been galloping along similarly to houses over the past year. Just reiterating what's happened with Perth, 25.4% increase in Perth median unit price over the past year. But look at Brisbane. Unit prices in Brisbane, which is a much bigger unit market than Adelaide and Perth, up by 26.1%. Hello? What happened to that Brisbane oversupply story? Oh, not here, please. 26.1%. And hang on to your hats, Brisbane unit owners. Your median price has gone up 40.5% over the past 2 years. What a great investment that's turned out to be, particularly with rents skyrocketing as well. So, good returns there in Brisbane. So, bounce back the unit market, but the usual suspects are really galloping along, particularly Perth and Brisbane, still moving along quite strongly. Melbourne picked up a little bit over the month, but still it's steady over the past year. So again, value markets in Melbourne, and Brisbane, Adelaide, and Perth prices are starting to close in on those Melbourne prices. So as I said, some good value opportunities there clearly in the Melbourne market. If you want to get a copy of that My Housing Market October house and unit price report, the full report, you can get it there by scanning the QR code, and that will give you a link to the to a PDF file. So let's have a look at the latest economic data. Home building approvals are on the rise. We look at home building every month because we know that Australia is undersupplied. That's part of what's driving higher prices and rents. It's a big concern for the government. They've tried a lot of things to try to offset that, but it's I think the problems are systemic. In other words, the system's broken, and it's going to take a lot to really turn it around and take some time. But we have seen some positives. Building approvals were up by 3% over September, following a fall in August. We do get these up and down results when we look at total dwelling approvals because units tend to go up one month and then down the next month. And that's because you can get a very big development one month and then you don't get the follow-up the following month. So it's a hostage to changes in higher numbers of developments on a month-to-month basis. But units bounced back up 4.7% over the month, but that really didn't pick up what it lost the previous month. Houses up by 2.2%. And the real story with building approvals is this: houses are back. So we've really seen a continual growth now in the building approvals for houses. So houses are back in town, starting to move along quite reasonably. But of course, it's probably technically easier to get a house, development underway than it is for a unit, which of course takes a lot longer. There are planning issues and other issues that have to be addressed for a unit development. And we're really seeing no growth in units, and depressed. The levels still remain really depressed, even though we're seeing a bounce back in houses, a gradual recovery in houses. And Queensland was the top performer with total homes up by 14.3% over the month. And these are seasonally adjusted numbers. And Queensland actually has had, it's not just big unit developments in Queensland. We're also seeing a lot of houses being approved for building in Queensland. And of course, we shouldn't be surprised because of the strength of those Queensland housing markets is certainly creating more demand for housing with higher prices. So there's the breakdown of the data. Units up 4.7, houses up 2.2. But when we look over the past year, we can see the clear disparity between what's approvals for houses versus approvals for units. So this year so far, house approvals up 9.2%, whereas unit approvals are down 8.4%. And over on the year-on-year comparisons, house approvals up 6%, and unit approvals down 11.6%. And of course, unit approvals, you sort of get more bang for your buck because it's higher density, and we need more unit approvals really to, satisfy all that unsatisfied demand for housing that we have. We can see here the trend just starting to pick up. This is national home building seasonally adjusted. It's a quarterly trend here on the monthly data. Just starting to pick up, but it's still sort of flatlining really, but starting to pick up on the back of those improved house results. This is the breakdown of the trends for both houses and units nationally for dwellings. For houses and units, I mean, broken down. And you can see there, houses continuing to rise, the trend, but the unit trend is still falling away. And that's a very low number. That 4,653 unit approvals nationally is still very, very concerning. Who's building the most of the capital cities? No surprise, Melbourne's building the most. As usual, it accounts for around about 40% of all dwelling approvals. Some interesting data there when we look at houses. Perth actually, over this year so far, has approved over 11,000 houses for building, whereas Sydney's only 9,000. And Sydney's a way, way bigger place than Perth. And yet it's not, it's being clearly outperformed in terms of house building approvals. And also Brisbane is outperforming Sydney, but Perth's just monstered it in terms of it's building approval data, and it's only second to Melbourne for houses, Perth. So again, a response to all that demand and higher prices. So when we look at the breakdown of development over the year, no surprise, this is the year to date versus the previous year. So this year to September versus the same 9 months last year. Look at Perth, will you? Units up 132%. Building approvals. Now, that's coming from a low base, but houses up 62.7%. But units are down across the board in all the capital cities on the year-to-date comparisons. And houses up in Melbourne, up 10.6% in Melbourne, up 18.9% in Brisbane. So some interesting data there. Clearly shows that, work's being done to make sure there's plenty of supply in that hot Perth market going forward, which is a good thing. Well, that slide hasn't come up. Not sure what's happened there. But when we look at the trend for capital cities in terms of annual building approvals, you can see the black houses starting to pick up. You can see houses are picking up, still below the pre-COVID peak there of 83,000. So this is the annual trend taken month by month by month. But look at units. That's crazy. Just 44,000 units approved over the year to September. And that's 60% lower than the peak back in 2016 of 110,000. So, man, that is just a big, it was a big building boom for apartments back then, but just 44,000 approvals over the past year. And, we're supposed, and this is capital city, so it's not all the states, but, we're supposed to be building 200,000 homes a year nationally. That's the target from the government over a 5-year period. And look at that in the capitals, it's just around about 120,000. So that's well under target in terms of the target for building. And people aren't happy out there. It's part of the reasons government are under stress. Governments are under stress is because of this undersupply, which is clearly evident there. And people having to pay higher rents and mostly higher prices. So that's it for our economic report. Nothing really changing there in terms of building approvals, but certainly Perth is galloping along, and units are still hitting, going lower. But houses have certainly revived, so that's the good news out of that. Latest auction results. So this is the auction results over the week ending November the 9th. Clearance rates a little bit higher in Sydney there, but certainly clearance rates have moved lower over the past couple of months. As I said, this is what we see. Typically, as the spring season evolves, higher clearance rates to the early, mid part of the market, depending on the cycle, but then clearance rates start to ease from those levels of the middle of spring. And we've seen that now. Sydney's now under the 70% benchmark that it was clearing every weekend. Auction numbers still pretty high. These are weekly auction numbers. We can look back over the last year. Obviously, they're the weekend numbers, but you can see there how over the past year the clearance rate has eased in Sydney, only marginally really, so still a reasonably robust market there. Melbourne bounced back in terms of listings following what was the long weekend holiday for the Melbourne Cup the previous weekend, so obviously more auctions conducted, and the clearance rate fell down again. It was quite a good clearance rate the previous weekend, 68.2%, which is amongst Melbourne's highest recently, but back to what we, I guess, expect from Melbourne, maybe even a little bit lower, but again, it's that, lower energy. Brisbane had a public holiday last weekend, so we sort of take a grain of salt with those results. You can see auction numbers were well down over the public holiday period in Brisbane. And also the clearance rate. But Brisbane's clearance rate's also been tracking lower over recent weeks. And again, maybe showing some signs of that cycle peaking in Brisbane, which, remains quite strong when we look at the prices. But Brisbane has a different auction culture to the other capitals. It's sort of Brisbaneites have an auction, and it's sort of part of the private treaty type of marketing campaign rather than a real standalone auction, which occurs in the other capitals. But again, it's just showing those signs of weariness, I guess, in the market towards the end of the year. Similar in Adelaide, its clearance rates have certainly fallen away over recent weeks. We were tracking a year ago, Adelaide, was pushing above 80% just about every weekend, and it was just really remarkable. And you can see there it's well below where it was a year ago. The clearance rate was in the mid-70s. And Canberra, similar to where it was the week before, 47% clearance rate versus 49, down a little bit. Again, that end of season energy pushing clearance rates down, and Canberra's been, teasing us a little bit in terms of a revival. Probably a bit too late in the year now to get a consolidated revival, but we'll keep an eye on that one perhaps for next year. When we look at the trends, the monthly trends in clearance rates, you can see there quite clearly for Sydney started to pull downwards. The same story. Well, not the same story in Melbourne. Melbourne's actually picked up marginally, but let's wait and see what the rest of the month does for Melbourne, because it had quite a good result there over the holiday, the Melbourne Cup holiday period. But really tracking in the mid-60s consistently, Melbourne, as we can see that for most of the year. Brisbane fell away. It was a low result over the long weekend, over the weekend holiday last weekend. So again, but Brisbane's really been showing perhaps some more Brisbane, type clearance rates lately, which don't typically reflect on the broader part of prices growth. But we can see Brisbane was a pretty hot market for auctions a year ago, and we know Brisbane house prices then were going through the roof. Adelaide, similarly, clearance rates started to fall as the year progresses, and the same story there in Canberra. So we'll keep an eye on what happens over the next 5 weekends to see if we continue to see that slide. As I said, good opportunities for buyers in the market this time of the year. More choices, and there's more leverage because sellers are quite motivated to clear their stock before the breakdown. So let's look if you're looking for those latest auction clearance rates, you can go to my LinkedIn site, Doc Andrew Wilson at LinkedIn, every Saturday at around about 6:30. You'll get the full national report. The snapshot report, which gives you the clearance rates for the week. And then on Sundays around about 9 o'clock, we get the full national report. Doc Andrew Wilson at LinkedIn. If you want to get a copy of the latest weekly auction report, there is another QR code you can scan, which will give you a PDF link to that file. We always finish off with a plug for the My Housing Market app in conjunction with our good friends at Infinity. This is a link to that app. It's a great app. It gives you real-time data in terms of listing numbers and prices and rent numbers and prices, listings for sale and listings for rent. You need a password to get access to this great little app, which is we're adding things to it all the time. So it's becoming even more valuable for those that want to know what's happening in real time in the housing market. And it's every suburb in Australia that's covered here that has data. We report on that. So get a copy of that, but you've got to get a password from Infinity. So get onto the Infinity folks and they'll give you a password. Here's a screenshot of what you can get. This is filtered for prices. You can filter it for the state outside capital city region or for the capital city region. We've filtered this for New South Wales, Sydney region. We're looking at Blacktown. We're looking at a house. You can also select a townhouse or a unit. You can also select the number of beds or all beds, or just you can select the number of beds to filter it even, to refine it even more. And that's our results there for Blacktown. It gives you the median asking price currently, the low and the high. So you can see the range of prices there, not just the median, and the number of properties that are for sale currently. So it's a good little app, and exactly the same output for rents, for the rental market. So get onto that one and use it. And we've also added a little extra data pack for the app, and that will give you the top yields, the top 10 yields for investors in each of the regions. So there we're looking at Sydney region for a one-bedroom unit, and these are the results there. Ignore Ultimo to some degree because there's a lot of student accommodation there, but we can't filter that out. So that's why obviously that has a very high yield, because it reflects a lot of student accom. But it also gives you the sales, the number of properties that are for sale and the number of properties that are for rent. We're going to add to that with vacancy rates soon. So you'll be able to have a full suite of data to be able to do your property analysis going forward. So more good news from Infinity and My Housing Market. Next week, we're going to look at the September home loans. That's a data set that's going to end this year, the monthly home loan data from the ABS, which is a bit of a shame. It's going to go to quarterly because it's a great data set. And we're going to look at the September wage price index. So that's very interesting to see what wages are doing, because it will play into what's going to happen in regard to interest rates. So, and of course, we're all interested to know, particularly in times of high inflation, whether our wages are keeping up with inflation. That's really important. And as usual, the latest auction results. So that's it for me today. If you want a copy of today's presentation in full, there is a QR code. You can scan that, get the whole deck and with all the other QR codes in it. And we'll be back next week with another exciting episode of the Wilson Weekly. So thank you to Infinity for hosting this. And I think we're up to number 103.
104, Doc. 104.
104. Wow. How time flies.
There you go. How exciting.
There we go. Yeah. So look forward next week, Lachlan, to another exciting episode.
Fantastic. Cheers, Doc. Appreciate it.
Thank you, Lachlan. Have a good week.